Hello everyone and welcome to the weekly market update from ICM.com. I'm Wal Makarim, market analyst, and I'll be sharing with you my insight for the week. So first we are going to talk about the recent market movers, then we will highlight the top economic releases for the week, and after that we'll do some technical analysis on major instruments. So let's start with the ongoing mover, the COVID-19. Cases are nearing 20 million worldwide, with the US having more than 5 million cases, Brazil 3 million, and India 2 million cases. The recovery surpassed 12 million, while deaths are above 730,000 as per the Johns Hopkins University. So the continuous spread is still imposing some risks to the economic recovery, especially in the United States. However, there are some positivity that in the past, yesterday, the cases in the United States, the single day cases dropped below 50,000 for the first time in the past 6 days. So this could be signaling that the pace of the coronavirus is slowing down a little bit, which could signify some positivity on in the coming days. So this is still one of the key market movers. So any updates on any vaccine could have an impact, a real impact on the market. But still, the past week or two, we didn't witness any serious announcement regarding any vaccine, and still, the continuous spread is weighing on the trust of investors and the economic recovery. So as fast as we finish from COVID-19, maybe with a vaccine, this could signal that the economic recovery could be faster and healthier. And this also definitely will have an impact on the monetary policy of central banks, and will affect currencies, bonds, and all the financial markets in general. So this is one of the movers. Let's move to the next one, the U.S. jobs report, which came out on Friday. Starting last week, especially that on Wednesday, we had the ADP employment change, which came out very less than expected or disappointing, and the drop in employment component in the ISM manufacturing PMI also weighed on investors' expectations for the recovery in the labor market. However, the jobs report came to diminish these woes, showing that the US economy created 1.763 million jobs in July, and the unemployment rate fell to 10.2%, while participation rate ticked lower only to 61.4% from 61.5%, which is very good relative to what we've been witnessing before. So the jobs report was very supportive to the positive sentiment in the market, and we witnessed a little bit of a rally in the dollar, a rebound in the dollar, and US stocks were also positive. Market participants also were cautious and awaiting any headlines on the next relief bill in the United States during the past week. However, the congressional leaders failed to reach a deal, which forced President Trump over the weekend to sign executive orders to restore the unemployment benefits that ended by July 31st. However, these benefits were reduced to $400 per week from $600 prior. So this had an impact on the market, definitely, since it's also a type of relief which could be supportive to the stock market, and we witnessed the rally in the stock market. The major indices were very strong during the first couple of hours of trading of this week. So this is all about the next relief bill. The US-China tensions also, they escalated last week significantly, especially after Trump administration imposed sanctions on Hong Kong's leader, Carrie Lam. So this was one of the key events, and also we saw a drop in indices for a while, but it didn't last, since we have all the other positive movers. In addition to that, we have the executive order about the pulse threats by the Chinese applications, TikTok and WeChat. And now we have there's a high probability that TikTok will be purchased by one of the top tech giants in the United States. So this could be one of the issues to be solved with such type of an agreement, or by the purchasing of this Chinese app from an American company. So this is about the US-China tensions. However, also we have to remind that China voted to respond to these sanctions on Hong Kong, and this will add to the woes over the relation between the two largest economies in the world. But also on Saturday, on the 15th of August, there is the next round of trade talks, which could also have some positivity or balance the risks to the relation between the two countries. And lastly, we had two key central banks meetings last week. The Reserve Bank of Australia, which kept interest rates unchanged at 0.25%, but announced to purchase assets again to ease the impact of a new lockdown on the economy. As we know, Victoria is the spread is again in Melbourne, and there are key measures taken to avoid the spread of the virus, and this will definitely have an impact on the economy, since Melbourne accounts for almost 0.2% of the GDP, or 20% of the GDP. So this will definitely put the policymakers and monetary policymakers under pressure if we witness any drop in the economic activity. So this was one of the key risks to the recovery in the Australian economy. And this Thursday, we'll talk about it now. The Reserve Bank of Australia governor will be testifying and for the House of Representatives on the economy. So this is one of the key events also to watch out for this week. And also we had the Bank of England monetary policy meeting or interest rate decision. The interest rate was left unchanged at 0.1%. And asset purchases at £745 billion. The bank raised the GDP forecast from their prior values. Now they see the economy contracting less than they thought. It's around 9%, negative 9% from negative 14%. However, they are still afraid of a slower recovery during the coming the third and the fourth quarter. So this is all about the key movers in the market. Now we're going to highlight the top economic events for the week. We start tomorrow with the jobs report from the United Kingdom. We have the claimant count change for July, which are expected to come at 250,000 from a prior reading of minus 28.1 thousand. So this is one of the key events tomorrow. The jobs figures from the United Kingdom. We start with the claimant count, which are expected to come at 250,000. So we continue with the jobs report from the United Kingdom. The unemployment rate in June is expected to have risen to 4.2% from 3.9 prior, and the average earnings index to drop to minus 1.2% versus minus 0.3%. So we have the claimant count from July and unemployment rate and average earnings from June. And then we move to the Eurozone with the German ZEW economic sentiment that is expected to almost tick lower to 58 from 59.3. Still very limited change is expected in the economic sentiment in Germany. Moving to the United States, we have for oil traders the Energy Information Administration short-term energy outlook. So those who are trading oil should watch out for this report. And then also from the United States, the producer price index is expected to rise by 0.3%. And the final event for Tuesday, the American Petroleum Institute weekly crude oil stock. Moving to Wednesday, we have a central bank meeting, the Reserve Bank of New Zealand. Nothing much is expected from the RBNZ, as the New Zealand economy is expected to come back on track and the economic recovery is underway. So we have to wait. Maybe the Reserve Bank will have to adopt the wait and see tone. So they will be waiting for more economic indicators to have more insight into the economic recovery. The bank is widely expected to keep interest rates unchanged at 0.25%. Also from the United Kingdom, we have the first reading of the second quarter GDP, which is expected to contract by 20.9% versus a contraction of 2.2% during the first quarter. So this should be one of the key events for those who are trading the British pound. So any disappointment could have an impact on the market. We also have the manufacturing production and industrial production. They are all expected to expand. Manufacturing production by 10% and industrial production by 9.4%. Also from the Eurozone, you have the industrial production expansion of 10%. And then moving to the United States, you have the consumer price index, which is expected to come around 0.3% in July versus 0.6% in June. And also the weekly oil report by US Energy Information Administration, which came out at negative 37.3 373 during the past week. So this is for Wednesday. Moving to Thursday, we have the jobs report also from Australia. The employment change is expected to rise by 40,000, and the unemployment rate also to rise to 7.8 from 7.4%. Also from the Eurozone, we have the German Consumer Price Index. Month-on-month change is expected to drop by 0.5% in July, and the weekly initial jobless claims from the United States, which are expected to come at 1.14 million versus 1.186 million during the release of last week, which was the lowest since early March. Also, we have from New Zealand, the Business New Zealand PMI, and as we spoke at the beginning of the webinar, the Reserve Bank of Australia Governor Lowe will be testifying before the House of Representatives Standing Committee on Economics. So this also could have an impact on the Australian dollar. So watch out for this event. On Friday, it's a little bit more busy. We have data from China, especially industrial production. So July year-on-year expected to come at 4.7%. Also, we have the second reading of the second quarter GDP from the Eurozone, expected to remain similar to the preliminary reading at 12.1%. Also, the trade balance for June, expectations of a surplus of 12.6 billion versus 9.4 billion in May. And then to United States, we have the retail sales, which are expected to have risen slightly in July by 1.8% versus 7.5% in June. So things are coming back a little bit to normal. Nothing much of a change in the activity. And then we have the industrial production from the United States expected to rise by 3.0%. The business inventory is also to drop by 1.2%, which is good. It is always good to have less inventories, as we always say. And the Michigan consumer sentiment, the preliminary reading for August, expected to come at 72. Nothing much of a change from last time of 72.5. And we end the week with the US Baker Hughes oil rig count, which dropped to 176 lately, despite the rebound in oil prices, despite oil prices trading near above 40 level. So this is all about the top economic events for the week. Now let's move to the MetaTrader 4 platform to talk about the top trading instruments. So let's start with the euro dollar first. So mainly we're witnessing the same move against the dollar. So it's a dollar move against other currencies, especially the euro and the pound. They're almost having the same move. So if we go to the weekly chart, we can see that last week the move lost some traction. We only made a little bit of a higher high in the market, but still we were trading inside the range of the previous week. So this could be a sign of a lost momentum, maybe in the recent rally. If we go to the daily chart, you can see here that we have two tops. Maybe it's a double top pattern. So you have to watch out for any break below this support. Now, when we add some indicators, here you'll be able to see also that there is a divergence. A key divergence is very clear on the RSI. So we have a higher RSI here. We have a double divergence 1, 2, and we witness this pullback. So we have, and then we have another divergence between this top and the other top. So you can see a higher high in price, but a lower RSI. So watch out for any break below the support zone near 117 level, which could trigger a bigger correction, maybe towards support zone near almost 1.1493, or else we could be able to retest the highs of 1916. So this is almost the pivot point near 17. It's a key point. If we break below it, maybe we are posed for a bigger correction, and if it holds, we could retest the highs near 1916. If we go for the Fibonacci retracement, you can see also that we retraced almost 23.6, which also coincides with the previous support here at 117 level. So this is for those who are trading the euro dollar. Watch out for these levels: 117 at the top, 119.16 and the bottom, 114.93, and watch out how the price will react to this divergence between the RSI and the price. If we have a closer look on the hourly chart here, I'm gonna remove all these indicators and just keep the chart clean. You can see that the price here, it is almost, despite this this sideways movement here for the past week, still we just approached towards the trend line of this move that was formed since July 10, and we bounced from it. So watch out for any break below this trend line and the break below this support here, and how the price could react to this. If we want to go closer to have a look at this corrective move here, maybe we're having a little bit of a channel formation and move down. So watch out how the price will stay. If the price will stay inside this channel, or will be able to break above it and go back to retest the high. So we highlighted the key levels for the euro dollar. If you're trading the euro dollar, 117, upside resistance near 119, and the bottom support near 1493, 115 level. Moving to the pound, similar formation, but the pound is a bit stronger today relative to the euro. So if you can see, the euro, we just retraced a little bit from this move higher, still below the previous high here. However, the pound moved a little bit higher, but still also the same formation. If we just go for the RSI level here, and we go for the daily chart, you can see that we have also a higher price and the RSI is lower. So here we have a high of almost 31.65, and here a higher price of 31.87, while the RSI here, you can see RSI almost around 83, while another reading of almost 80. It's not very clear divergence similar to the one in the euro, but still we'll have to watch out for this formation. So on the downside, watch out for any break below the support of 29.75, which could trigger a bigger correction towards 128.23, which is almost 150 points. And on the upside, you have to watch out for the previous high near 131.70 area, which could trigger another move higher if broken towards the top of the Bollinger Band, which comes in around 32.90. So which was also coinciding with the previous top ahead of the key top near 35.80. So watch out for these levels if you are trading the British pound against the dollar. Let's move to the dollar yen. Nothing much happening on the dollar yen. If you can see the weekly chart, we had almost dodgy last week, so there's indecision in the market. It can go, the pair can go either ways, waiting for some fresh fundamental drivers. So if we just want to make it clear to take a decision in the market, we just have to watch out for these trend lines, since the last move was down and then we had a little bit of retracement. So watch out for any a break above these trend lines. We're currently trading near the steeper trend line, so any break above this could trigger a retest of this upper trend line here. So watch out how the price could react along with these. A key pivot point, it's very clear, the one that we've been trading near for the past during the past weeks, which is almost around 106 level. So this is a key pivot point. So any break above or any clear move above this point could trigger the retest of resistance near 108.10 level, and any move lower could retest the lows near 104.14. So almost we have a range of 400 pips. We're currently in the middle. Any positive sentiment or any positive drivers for the pair could drive it towards 108 level, and any negative drivers could drive it lower towards 104 level. So we're currently in the middle. Let's see what the indicators can tell us, but I believe since we're trading in a tight range, there's nothing much on these indicators. Definitely the RSI is near 40 level. We are currently trading near the 20-day simple moving average, the middle band of the Bollinger Band, and the targets are similar. The targets of the Bollinger Bands are similar to the ones that we highlighted. So this bottom here near 104.55 and the top near 107.33, we highlighted a bit of extremes, 108 and 104 levels. So it's very clear we're still inside in the middle of a range, and there are two probabilities. We can either move higher or lower, so it depends on the drivers, on the fundamental drivers. So you have to watch out for the what's the better case for the coming move in the USD JPY pair. Moving to the Australian dollar against the US dollar, some of the clients we're betting against the move lower, since we're having another outbreak in Australia. However, the pair was a little bit solid and still holding. We have to watch out for the comments, how the COVID will develop in Australia, and also the comments of the RBA governor on Thursday night or Friday morning in Australia. So this would have an impact on the market. You can see here the closing, the weekly candle. It shows the indecision in the market. So this could highlight for us a key range also to trade inside, which is almost here near 70-60 level, and on the top the previous tops near 72.40. Also there's a line that combined also these three tops here on the smaller frame, so we had almost a triple top formation, but it's not very clear. So here we had double top, and then here we have another top and a second top, so almost a double top formation with the support near 70.64, and we're currently trading also near the previous trend line that was formed. So watch out for any retracement back lower near this trend line. So nothing much happening on the Australian dollar. We have two key movers this week: the jobs report in Australia, and the jobs report, the testimony of the Reserve Bank of Australia ahead of or before the House of Representatives Standing Committee on Economics, and the developments of the COVID-19 there. So this is for the Australian dollar against the US dollar. These are the two key levels, 70.60 and 72.40. On the upside, you can see here that this level that turned out to be a support was previously a resistance, a key resistance. So any break here could trigger further downside towards 69.20 level, which was also the bottom of a consolidation range that held for around 2 weeks. So this is for the Australian dollar against the US dollar. We can see almost similar formation for the New Zealand dollar, but it's very it's a bit softer. So the overall formation, it's similar. We had a move higher and then a consolidation with a little bit of higher highs. However, the Australian dollar, if you can see here, the Australian dollar had a new higher high, but the New Zealand dollar failed to have a new higher high, and here we posted a lower high relative to what we've been witnessing forward, and currently we are testing the similar low. So watch out for any break below this low, which could trigger further downside towards the previous support zone near 63.85. So this is a key support zone here, since it was also the previously a key resistance. So between 65.80 and 66 level is a key support zone, a key pivot zone also. So watch out for how the price will react near this. And on the upside, we have resistance near the previous high of 67.13 ahead of the previous top around 67.50. So these are the key levels to highlight on the New Zealand dollar against the United States dollar. Let's add some indicators and see that the price is approaching the 200 hour 200 H4. Let's go for the hourly chart. You see that the price is trading sideways. It's very clear that we have sideways trading here, since the prices the moving averages are indecisive, and nothing much happening, but the bands are getting closer to each other, signaling less volatility. So watch out for any breakout soon, and this could happen on the Reserve Bank of New Zealand monetary policy meeting. The USD against the CAD. The CAD was among the strongest commodity currencies relative to the Australian dollar and the New Zealand dollar. We're still succeeded in making a lower low on the daily chart. It's a sign of strength for the Canadian dollar, and still we are trading below this falling trend line that was formed since the previous tops, and now the price is trading near a key pivot point near almost 133.50. So if we give a closer look on the hourly chart, so we have to first set these resistance levels, the previous tops 134 and 134.60, and on the downside 32.35, with pivot point being near 33.30 levels. So watch out for these levels if you are trading the US dollar against the Canadian dollar. We don't have like much of economic indicators coming out from Canada this week. We had on Friday the jobs report, and currently there aren't like a new important news on the radar from Canada. Moving to the gold, which had a little bit of a correction. So let's explain. If we start with the weekly chart, uh, well, it is still solid. We have consecutive weeks up, showing steady gains, and still we can see a big sign of weakness on the weekly chart, despite having this wick here. If we go to the daily chart, we can see a bearish engulfing candle. These are the 2 hours difference in server time. So we have this drop on Friday. We had this drop on Friday, a bearish engulfing candle, and currently we are retracing a little bit off Friday's losses. So maybe this could be the first sign of an exhaustion in price. If we have if we set the Fibonacci retracement here, we can see that the price almost corrected around 23.6 of the recent rally. And if we go for the hourly chart, let's highlight how the market began all this move. So we had here these consecutive tops, we had an ascending triangle, and you can build this trend line here, and also you can combine this to form the channel where the price reached the top exactly and it dropped lower here. So you have to watch out for, if you want to join the trend again, if you still believe that the market still has room to move higher, you can join the trend near this trend line. If the market moves again near this trend line or near the support zone of 1990, which was at the time a resistance zone here. So you can wait for a bigger correction. Maybe you have an A move, B move, and then another C wave here lower towards 1990 and another leg higher. So it depends on how you are how you are looking forward for such for the move. If still we have a rally higher, or the prices could have a bigger correction until it moves again with the new drivers. So this is what you have on. Let's just delete all the indicators and highlight just the key levels. So first we have this level here, which is a key level, a key support zone. It will come around 1990 level. Also, we have the previous low reached on Friday, 2015 level. And on the upside, we have the previous high of near 2070. And if we want to have an extension or just to expect a further extension in the move, we have to draw Fibonacci extension to check where the prices could head next. So we can have the Fibonacci retracement and go for the 123.6 level, which could come in at 2101. So these are the key levels to watch out for. Gold, 2015, 1990, how the price will trade with this line combining the previous stops, how the price will react. And on the upside, we have the previous high of 2075 or 2072, and after that the 2100 level, the 123.6 Fibonacci extension. If we just add some of the technical indicators, let's start with the weekly chart. We can see that still the prices are closing above the Bollinger Band, above the upper band. The RSI is around 78 level. On the daily chart, we witnessed that the RSI had a correction here, and this divergence occurred, and the prices retraced a little bit lower, but still far from the median, and the price is still close to the upper band. Going to the H4 chart, we're trading in the middle, and on the hourly chart, we can see here that the market traded sideways for a while, so the band came closer to each other, and now during the past hour we had this breakout here. So watch out how this will build again. The price is finding support near the 100-hour exponential moving average for the past move, all the move here. We found support here near almost 1910, and again at 1939, and again at 1957, and here currently we are trading near the 100-hour exponential moving average. Any break could trigger maybe further downside towards the 200-hour exponential moving average, which also coincides with the 2000 psychological level. So this is all what we have about gold. Moving to the Dow Jones, which had a very clear and positive rally this week, and still enjoying the positive sentiment in the market. So we had here this double bottom formation. The market moved higher. We had this key resistance level here, and the market broke above it, above the 27,000. So if we want to just highlight the top levels to watch out for, so we have to watch out for previous levels here, which were key resistances and now could turn to, there were key support back then and now could turn to key resistance near 28,100. And a key pivot point is the previous high near 27,300. And on the bigger scale, also, if you want to look for support, you have to look out for 25,900, which was the previous bottom behind before this move. We have a minor also support ahead, which was also the support back in early July near 26,313. So these are the key levels if you are trading the Dow Jones. On the hourly chart, we can see that the move is very steep. So we can see here that we are trading inside a very steep channel, and the market is still moving higher. So watch out for how the price will react here, whether we will trade sideways or we'll have a bigger correction for this move higher, despite the fact that we are moving higher and then having a little bit of a correction for the precedent move. 1, 2, 3, 4. So we're always correcting at a certain percentage the move higher. So this is for the Dow Jones. Let's move for oil. We had a little bit of a move in oil last week, but still it wasn't solid, and we're still back in this narrow trading style near 42 level. It's the highest since March, but also we are lacking positive or significant move in the market. Fundamentally, yesterday the chief executive of Aramco stated that the demand levels are back almost to they're having some positivity over the oil demand levels in Asia as the economies are reopening, and also on the supply side, Iraq will be cutting output by almost 400,000 in August and September in order to compensate for the breach of the OPEC Plus agreement. So this is on the fundamental side. If we just have to pinpoint some of the technical levels, watch out for the previous high reached last week, 43.70 almost, and after that we can go for the higher high of 48.57. But with this narrow range, with this narrow trading, if we don't have like a very good solid fundamental catalyst, uh we can't have like a $6 move within a week if the market continues without these drivers. On the downside, we have 39.13 as a key level, and after that we have 36.90, which is almost around 37 also. So these are the levels to watch out for if you are trading oil. If we just want to add top also economic indicators, we can see that the bands are widening a little bit after that spike higher is being calculated in the band. So, but still, the bands are very narrow relative to what we've been witnessing earlier, and the prices now are trading above the 100-day exponential moving average, which is a little bit of a positive sign. But still, we are lacking solid movers which can drive the prices in a certain trend. So this is all for today. If you have any questions, please write them down. I'd like to remind you that all the opinions, analysis, news, and information mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. I'd just like to remind you again that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. So we have a question, the red or the blue EMA, kindly advise time period using. Okay, so I'm using the 100 and 200, the 100 and 200 period for exponential moving average. We can, I don't know what's kindly advise time period using. Okay, so you can definitely use them. It depends on your purpose. If you are scalping, if you are building a long-term position, if you are trading the trend. So this is definitely depends on your strategy. Uh, we have to watch out for reversals on the smaller time frames, which could signal that there is a little bit of a weakness in trend, and then go to look out for bigger formations on the bigger time frame. But definitely using it on the daily chart is sometimes giving very good results. So always, as we go farther with the period, usually they are more reliable. Okay, so someone is asking about gold. Still, as long as we don't have like a real, as long as we don't have like a real basis for a bearish or at least a big correction in gold prices, this could continue since central banks are pumping money at a very fast rate, with interest rates being 0% and near 0% level. So this is making gold very attractive to investors. Also, let's not forget also some governments are going for also fiscal stimulus, which is also supportive. You have the tensions between China and the United States, which was also supportive to safe haven assets. So there are a couple of factors that they are supporting this strong rally or this bullish rally. This bullish rally has mainly two can have two downside risks to we can have two downside risks to this rally. First of all, could be the vaccine, as I stated last time, vaccine to the coronavirus, which could restore people's confidence in going out and resuming the activity that they used to do before the pandemic outbreak. So this is one of the key downside risks to the current rally, since when people are confident to go out again, the economic activity will be back sharply and rapidly, and this could lead central banks to tighten their monetary policies and refrain from pumping such money in the markets, and also will also support governments and also dropping the fiscal stimulus. So this is one of the key downside risks. The other one could be the outcome of the US elections. We're still a little bit far from the US elections, but also how this will play in the market could have an impact on the rally. Okay, so is it possible to reach 3,000 gold? What do you think? Honestly, you can't just set with the current market dynamics, you can't set long-term forecasts like 6-month forecasts or 1-year forecasts or even 3-month forecasts, since the market dynamics are changing very fast. For the past couple of months, we had the same issue. Yeah, definitely the coronavirus outbreak and its effect on the market and how central banks responded to this outbreak, but also this could change within one vaccine. So if we reach a vaccine, this could change the total market dynamics. So that's why you can't just build an expectation for a long-term, maybe long-term expectations for a certain level to be reached. So that's why you have to always make sure to assess day by day what's happening in the market and what are the changes to see whether this price level could be reached or not. But the factors behind the recent rally in gold, they can all be affected, or they can all be changed within certain developments in the world, especially regarding coronavirus. So that's why you can't just set numbers. Okay, there are some analysts talking about 3,000, some they are talking about 4,000, some they are talking about 2,500. So it just can't set a certain limit with the current market dynamics. So I would just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So I believe this is it for today. On Wednesday, we are holding an educational webinar about harmonic patterns. What are the popular harmonic patterns, how to trade them, how to fine-tune your stop losses and take profits in order to have a better performance in the market. So you can join us on Wednesday for this educational webinar. And this is all for now. Thank you all for joining.